If you've been thinking about purchasing your first property, an investment property, or perhaps you're a seller looking to sell, cash out, and buy your next home, and you're not an all-cash buyer and are thinking, how am I gonna fund this next purchase? And what's the minimum down payment on a loan? The interest rate? What's my payment going to be? Well, this video is for you. Hi, this is Gia Silva, your trusted real estate advisor, and today we're gonna talk about all the financing options for your next purchase. Now let's remember, there is a lot of different loan options for specific situations, property types, minimum down payment, different requirements. So first, let's talk about a property that you would be living in. This would be considered an owner-occupied property. Now, under a government loan, FHA loan, and VA loan, your minimum down payment for an FHA loan is 3.5% down. For a VA loan, 0 down. You're 100% financed if you're a veteran. And for a conventional loan, there are programs where you can just put 5% down for your primary property. Now this is for single family home, one property, condo, or townhouses. Now the misconception, especially for first time buyers, is that you need 20% down payment to buy your first property. You do not. You do need the 20% down payment to avoid mortgage insurance, what you've heard as MI. However, if you're a first-time buyer, you're purchasing your property, you only need 5% down for a conventional loan. Now let's say you're thinking about living in one property and renting out the other. This would be a duplex. What's the minimum down payment if you're thinking of purchasing a duplex? Well, 15% down. So you need 15% down if you're looking to buy a duplex, again, where you're gonna live in one of the units and rent the other one. Now the 15% down to purchase a duplex is a conventional loan. If you're looking to obtain an FHA loan, a government insured loan, you need just as little as 3.5% down to buy a duplex that you're gonna be living in. However, there is a lot of more additional requirements that are gonna be case-by-case scenario. And if you're thinking of purchasing 3 to 4 units, living in one and renting the other ones, the minimum down payment is 25%. And guess what? You can purchase up to 4 units with a VA loan. That means 0% down. Now let's talk about a different scenario in which you're thinking of purchasing a rental property. You're not gonna be living in the property. What's the minimum down then? If you're thinking of purchasing a single family house, a condo, or a townhome, and you're thinking of renting it out, the minimum down payment is 15% down. And if you're thinking of purchasing a duplex, a triplex, or a fourplex, the minimum down is 25%. And since they're gonna be your rental properties for both FHA and conventional, the minimum down payments are exactly the same. So again, if you're renting this property, it's 15% down if it's a single family home, a condo, or a townhome, and 25% if it's 2 to 4 units. So what are the requirements that you need to qualify for these types of loans? So first, let's take your FICO score. Whether you're purchasing a home where you're gonna live in or rent out, the minimum FICO for FHA is 580, and for conventional is 620. And if you're obtaining a conventional loan, your interest rate will be much, much better if you have a 700 FICO or above. So along with your credit score, lending institutions wanna know, do you have income? Are you working, or you have some other type of income that they can go by in order to qualify you for a home mortgage? Now the standard is that they're going to be asking for 2 years tax returns and 2 months of your pay stubs. And if you're self-employed, they're gonna be asking for bank statements and additional information. Now that's just standard. Right now, there's a lot of moving parts and new loan options that are gonna be coming in 2022. So I recommend that you speak to a trusted loan representative. So the reason why lenders are looking into your income is because they have to know how much you're making versus how much you have in liabilities, in debt. So they come up with a debt to income ratio. For a conventional loan, the debt to income ratio is 45%, and for an FHA loan, it's up to 55%. Now wait, don't go calculating your debt to income ratio before you speak to a trusted loan representative that can give you all of the information, because there's so many different case-by-case scenarios. Some lenders may want to see some cash reserves in some type of account that you have, whether it's a savings, checking, retirement account. They'll also look into any gifts that you have received and count that as your cash reserves. They mainly need it to know that you got money. And how much can you borrow from a lender? Okay, It's been rumored that loan limits are set to increase in 2022, but they haven't been released yet. So let's just talk about the numbers that we have right now. Today's loan limits is $822,375. And that's how much you can borrow when you're purchasing a property. So what if your loan limit's gonna be higher than that amount? You can't purchase then? So that goes into a jumbo loan, which we'll be discussing in the next video, so make sure to subscribe. Now let's talk about mortgage rates. Why are they so important? Why are people talking about mortgage rates, interest rates, increasing, decreasing, literally keeping their finger on the pulse of rates every single day? What does that mean? Well, they determine your purchasing power. When rates increase, your payment increases, which decreases your purchasing power up to how much you can buy. As you can see in this chart, when the interest rate increases, so does your payment. So 1/4% in your interest rate or 1/2% will give you a much higher mortgage payment. So what's the interest rate today? Well, we're towards the end of November. The interest rate right now for FHA is 2.99. Wow. And for conventional, 3.125%. Now listen, I've been in real estate for 18 years. These rates are still historically low. So that's the reason that right now we have so many consumers looking to lock in that really historic low rate. So I remember right around 2004, 2005, rates were considered historically low as well, and they were around 4% to 5%. So food for thought, go get qualified now and get ready to buy. But wait, interest rates aren't gonna stay low forever. They're bound to increase. So what can we expect for 2022? Well, good news, economists are already predicting that there's not gonna be a lot of interest rates increases. It's gonna be a very slight increase throughout the year. That's one. Number two, as I mentioned, loan limits are going to be increasing. Right now, 822, they may be increasing to 900 and above. So stay tuned to know more about that. That just means that your purchasing power is now gonna be more, which also means more consumers, more buyers out there looking for property because rates are still low and now they can purchase for more. So what does that mean? More consumers, more buyers on the market, putting offers on one single home since we still have low inventory. So you've seen it, one property on the market, many buyers, that increases the price of the property. So buy now. And lastly, more good news. There are talks about decreased mortgage premiums. That means that mortgage insurance is gonna be less for conventional loans, less than 20% down. That means if you don't have 20% down and you're going to have mortgage insurance, the premium is gonna be less. Well, there you have it. These are pretty much all the loan options that are out there. Just remember that there's different scenarios and you may have a different scenario than someone else. So it's important that you speak to your loan representative to get all the answers. Now, I wanna remind you, it's really important that you choose the right lender because the right lender is gonna get you the best loan options and the best mortgage for you. Now, my team and I work with some really great lenders. If you would love some recommendations, make sure to contact me below and I'll send them to you. So that's it again. Remember, if you found this video valuable and very good, go ahead and subscribe, comment below, and like it. See you next time.